Hello, everybody, and welcome to today's episode of the Trade Recap series. Today, unfortunately, we did not take any trades because we just saw quick moves between liquidity and strong conviction on one side or another. And the V2 strategy is essentially taking a look into entering when there's a retracement, providing you with good value. But today, we did not see that happen, and thus we did not have enough conviction to make a play where we can invest our capital and gain probable returns. So let's take a look into what happened today by looking on the charts. To make it simple, after all the long-term analysis with higher candlesticks and much more, what we noticed was that there's liquidity up at these highs and liquidity down here, followed by 30-minute zone and further liquidity down there. But our main liquidity levels are this high right here alongside this low right here. So let's take a look into what happened. But before we do that, let's take a look into ES chart as well. So ES, how it looks is that we have high liquidity to target at these highs. We have a 30-minute around this area, and our main lower liquidity was at these lows. So now let's take a look into what exactly happened, okay? So looking on the NASDAQ charts, what we saw happen was that market opened right at 8:30 a.m. like always, CST, and we saw expansion towards the upside, and that created this main liquidity level here. But this happened after market open, so we want to be very keen for these type of levels. So we can ignore that level for now. Just focus on this high level and these levels down there. We started seeing expansion to the upside, right? So this leads us to believe that we can potentially seek more money up at these highs just by looking at the charts. But Bookmap tells us a different story. If you look on Bookmap, after the upwards move happened, there was large amounts of liquidity at these highs that have been tapped into, and then icebergs start coming in. What this means is that sellers are starting to shift the market and it's starting to gain into a more seller dominant market. Another symbol of that is that CVD is shifting from green to red in this case. And that truly highlights the shift in the market from our upwards expansion, which we saw right around market open, to this downwards move. Now, also want to give a shout out to Live Alex with Think with Bookmap, like always, because it's a great resource for traders to use. Free Bookmap Live. You can find it on YouTube. I highly recommend you check it out. Now, we saw this happen, and after we saw this sweep happen to the downside, we started generating liquidity down at these lows once again. And liquidity from the upside has been reduced heavily from this to this. Although we do have liquidity levels here, it's very likely that we tap into this liquidity level first before we make any move towards the upside. So let's take a look into what happens as we go on. We break this level, and as we break this level, we start creating barriers above, supporting the movement to the downside, potentially taking a lot of this liquidity down here. Let's see if we take out this liquidity block. Would you look at that? We tap into this liquidity block and we start holding, and eventually we take a lot of it out, and that results in movement upwards. And this movement upwards also gets demonstrated by the introduction of many icebergs as seen here. So just like the sellers started coming in here with so many icebergs, now the buyers are starting to come in after a sweep of this liquidity level with a good amount of icebergs as well. And also further confluence is that we swept this liquidity level on NQ, which was our main liquidity level for the day. And furthermore, we tapped into a 30-minute demand zone on S&P 500. So right away from that, you should have stronger conviction to enter and head towards the upside, but you're gonna need more conviction to see upside come. So we were waiting and waiting and waiting, and upsides did come, as you can see here. And why did they come? Because look, we removed all this liquidity from the downside, from heavy to light, and we started creating liquidity here. Now at this point, it's solid idea to think we might consolidate or wait for a break of either this level or this level to see where market will go next. Turns out that we break the highs, and after we break the highs, we start generating a lot of liquidity up at these highs like previous, and there's more liquidity up at these highs. So now I'm already thinking that we can break these levels or at least tap into these levels before further move. Now if we move on, we can see that price continued and continued to go up, and this can be highlighted by this move of barriers. The barriers started from there, went up here, went up here. It just continued the price up, and that's a very strong indication of continuation within the markets. You would not have known any of this by looking on a simple candlestick chart. Remember, you're already one step ahead by taking a look on candlestick charts and doing technical analysis, but you are 2 steps ahead like Nikocado Avocado if you understand what's going on behind each and every candle and understand the relationship between buyers and sellers in the market. Now, taking a look at that, we continue to go higher until eventually we take out most of our liquidity and break a barrier to head towards the downside. And when we break barriers, that's your sign to exit, and that's a sign of invalidation towards the long. Continue to move up. Although we had some choppy action before this, we had majority upside, and once we've swept a lot of this liquidity and liquidity starts dissolving, would be the word for it, and we see a break of this barrier right here, you can expect downside to occur to next relative liquidity levels or to go back to PLC, which tends to be an area of equilibrium. So that's essentially the entire context for the day. Price kept on going higher and higher after a sweep of this liquidity level, and at V2 trading, we're looking for a decent sized retracement for us to get enough conviction to enter, and due to the size of these longs and the barriers continuing to go up and up and up, there is not really any retracement today that provided us with enough conviction that fits within our risk management that we're willing to invest capital in. And that's because it showed that we are maintaining our system and we are not risking what we should not. Although the trades may have gone our way, the trades very well could not have gone our way either. We want to get price at a fair value, and when we see such expansion to this level, it's very difficult to get fair value on a move like this. Now, we potentially did have opportunities after the 10:30 time period, but we are out around 10:15 to 10:30, and this is essentially our period where we trade, and no opportunity was presented in the time, so we did not take any trade. Now, that's pretty much all I can say. We swept the lower liquidities, had multiple confluences for the upside, including a heavy order flow bias, and we headed to these high liquidity levels, which were our main liquidity levels on ES, and there wasn't much telling where we were going to go on the upside after a break of this high, but ES provided us with more context in that case. That's essentially all I have here today for this video. This video turned out to be a bit longer than usual because we did not take any trades today, so this turned into quite a bookmap and order flow crash course video, and this is probably one of the videos that I put the most knowledge into, I'm not gonna lie, because today was the day where bookmap was heavily used and alongside order flow, and it truly highlighted the power of order flow as well. Now, I highly encourage you guys to take a look and research into the world of order flow and take a look into how it can involve your trading, whether it be individually or for a firm. Take a look into the impacts you can make with continuation signals alongside reversal signals, understanding what is going on behind the markets. Now, that's it. That's all I have for the video here today. If you have any questions, please feel free to leave a comment down below or join the Discord server. Link is in the description. I'm also happy to announce that our internship program has gone live. You may apply online if you go to our LinkedIn page and click on the job application there. We're looking to take on eager and enthusiastic students who are interested to learn more about trading, financial analysis, marketing, operations, or even graphic design. We're looking to take a multitude of interns through a selective process that ensures that the intern is a primary beneficiary, because this program is for internships to benefit through a variety of training, mentorship, future utility, and overall hands-on experience and openings in our company as well. Everything in V2 is free for the time being, and we're looking to expand and make an overall game-changing experience as a community in the trading world and truly mark our name in the trading scene. That's all I have here for today. Thank you so much for listening to this trading recap, which is more like a crash course or utility video, and I will see you guys tomorrow for the next trade recap or educational video like we've done today. Thank you so much. Have a good day.